I did a little survey. If I offered you a gift with two options, would you choose 10 Bitcoin or $1 million? No surprise, most people chose the $1 million. Why? Because with $1 million you can buy a house, a car, right now. But 10 Bitcoin? Just unplug the internet and poof, it's gone, right? Plus, Bitcoin is insanely volatile. Just a few days ago, it dropped below $80,000. So of course, holding cash seems safer. But imagine this. What if today, the people who will run America for the next 4 years told you that Bitcoin will hit $200,000, $1 million, or even $10 million per coin, while your $1 million will devalue to $500,000 or even $100,000? Would you still choose the dollar? Back in 2008, when the financial crisis hit, global assets crashed and were dumped like garbage. At that moment, if you had $1 million, you were a king. No one could touch you. But if I had walked up to you back then with 100 Bitcoin and asked to trade for your million, what would you have done? You'd probably call the cops, because Bitcoin was only worth $0.03 at the time. You'd think I was a scammer or just insane. Fast forward 10 years, those same 100 Bitcoin are now worth $10 million. In other words, if today you want to use your $1 million to buy my 100 Bitcoin, then you are the scammer or the fool, because you're trying to swap 1 million for 10 million. So now the question is, in the future, what will be worth more, $1 million or 10 Bitcoin? Some still say Bitcoin will rise because it's decentralized and can replace the dollar. But the truth is, that no longer matters. Bitcoin is no longer decentralized and it won't replace the dollar. Why? Because it's becoming an asset controlled by the American ruling class. Bitcoin is no different from the dollar now. I know many people feel like Bitcoin has nothing to do with them. They don't know how to buy it. They think it's a scam, illegal, or too expensive now. But think again, this so-called scam has been around for 17 years and hasn't disappeared. More importantly, it's not just investors buying Bitcoin. Even the U.S., a country that once condemned Bitcoin as criminal, is now buying it. They might even be selling off national gold reserves to get more Bitcoin. What does this mean? It means that in the future, the money America owes the world might be repaid in Bitcoin. It means that even if the U.S. cuts interest rates or prints more money, the asset that will surge the most won't be stocks, real estate, or gold. It will be Bitcoin. It means Bitcoin will face no more barriers, and eventually you'll have no choice but to own it. Is that really possible? This video might shake your worldview and values. Some might criticize me. Some channels will watch this, steal the content, and copy it. But none of that matters. If even one or two things I say today help you live better, then I'm fulfilled. And if you're worried you'll forget everything after watching this, just like you've forgotten good advice before, then hit like now and the video will automatically be saved to your playlist. You can come back to it later and act when you're ready. Today, Bitcoin isn't what people once thought it was, because it might become the only thing that can save the US dollar, US stocks, and US bonds. What does that mean? I've said this before. The US must expand its balance sheet and print more money. Why? Because what America spends is far greater than what it earns, so it has to borrow just to keep running. But here's the issue. Right now, no matter whether the Fed raises or lowers interest rates, U.S. bond prices keep falling and interest rates keep rising. That means U.S. bonds are getting harder to sell. Otherwise, why raise rates and cut prices just to attract buyers? To put it simply, America has no money to spend, and no one wants to lend them more either. Back in January, when Trump took office, a large portion of America's previous debts came due. At that moment, the only option was to expand the balance sheet. In other words, print money, lend it to itself, and continue spending. That's borrowing new debt to pay old debt. But here's the trap. Biden handed Trump a skyrocketing stock market and a collapsing bond market. So if the U.S. is forced to print more money, stock prices will be pushed even higher. Meanwhile, U.S. bonds will keep losing value. Then what? U.S. stocks may reach insane, unsustainable levels. No one will want U.S. bonds. The market crashes, and the dollar becomes worthless. This is the trap Biden left for Trump. The ideal solution? Collapse the U.S. market just like in 2008. Then print money to rescue it. During the crash, short the market for profit. Then buy the bottom and earn a second fortune. If you want to understand this better, go watch the previous video. But here's the key point. Printing money has serious consequences, just like parents giving their kid a phone to stop them from crying. When a kid cries, many parents hand over a phone with games to shut them up. The result? The child gets distracted with games and ignores school and homework. When the parent finally realizes and takes the phone away, the kid throws a fit, screams, and struggles even harder. In other words, using the phone only temporarily soothes the child. But when you take it back, the pain becomes much worse. If you don't take it back, their learning is permanently harmed. Sound familiar? That's exactly how the Fed manages the market. In the past, whenever the market hit turbulence, the Fed could simply cut rates, inject free money, let companies borrow cheap, or even buy back stocks to boost prices. But the moment they stop cutting rates, the market panics and crashes uncontrollably. And just cutting rates is no longer enough. Now they have to print more money too. It's like this. Letting kids play games is no longer enough. Now you also have to spend real money in the game to keep them happy. Back in 2001, when the dot-com bubble burst, cutting interest rates by 5% was enough to save the market. By 2008, even dropping rates to 0% wasn't enough. They had to print $3.7 trillion to fix things. Again in 2013, more money printing. And in 2020, they even allowed unlimited printing. That means if the economy crashes again, even negative interest rates, where borrowers get paid to borrow, won't be enough. Look at Japan and Germany. Negative rates just made things worse. So the only road left? Print more money. But the more you print, the more the dollar loses value, and inflation explodes. Just like Zimbabwe, where even hundreds of billions couldn't buy a single meal. Worse yet, America is stacking up massive debt. Why? Because it's printing dollars, then lending them to itself to keep spending. When the market is flooded with dollars, you need an asset to act as a container to absorb the excess cash. Otherwise, the tsunami of money will flood and drown the entire economy. Historically, the U.S. stock market and gold have played that role. Whenever America prints money, stocks and gold rise. But this time, it's different. In 2020, the U.S. printed without limits. And if they do it again, the amount of money flooding the market will be unprecedented. As the new leader of the U.S., Trump will need to find a new asset, one big enough to soak up the flood of dollars. That asset might just be Bitcoin. Some people might laugh at this. They'll say Bitcoin is limited to 21 million coins. Even if it reaches $150,000 per coin, the total market cap is only around $3 trillion. That's less than one company like Microsoft. Call that a container? That's not a vault, it's a footbath. Even if Bitcoin hits $1 million per coin, its market cap would be around $20 trillion, just the combined value of 20 top companies on the U.S. stock market. So how can that be a container? Well, it can't. Not Bitcoin itself. But if you use Bitcoin to create ETFs, futures, and other derivatives, then the quantity of Bitcoin can be expanded infinitely. Let me explain. If you buy real Bitcoin, gold, or oil, you receive the actual asset. But since there's limited supply, once they're bought up, the market runs dry. That's the limit of real assets. But if you buy a Bitcoin ETF, you're not holding Bitcoin. You're holding a paper that represents its value. If the price of Bitcoin rises, your paper goes up. You can sell the paper at a profit without ever touching real Bitcoin. It's the same with futures and derivatives. They're just bets between two sides. One bet's price goes up, the other bets it goes down. If it drops, the bull pays the bear. If it rises, the bear pays the bull. So even though real Bitcoin is limited, the number of Bitcoin-based financial products is unlimited. In other words, it's not Bitcoin that's the real container for the dollar. It's Bitcoin derivatives. Here's the twist. In the past, the U.S. said Bitcoin wasn't legal. But just last year, they approved Bitcoin ETFs. So Bitcoin still isn't fully legal. But America opened the door for Bitcoin ETFs, letting money flood in. This tells us something critical. Bitcoin might be decentralized, but Bitcoin ETFs are not. Think about it. If more and more people invest in Bitcoin products instead of real coins, then even if Bitcoin is decentralized in theory, in practice, it no longer is. You see? And here's another thing. Both Bitcoin ETFs and futures must be bought in US dollars. That means Bitcoin is now tied to the dollar. Once upon a time, you could exchange dollars for gold. That's why people held dollars. Then dollars could be exchanged for oil, and the world kept using them. Now, if dollars can be used to buy Bitcoin, the world will keep holding dollars. So, no matter how much the U.S. prints, as long as the world needs dollars to get Bitcoin, the dollar can't collapse. Some say the U.S. owes $36 trillion and can't possibly repay it. But in reality, 75% of that debt is internal. Money the U.S. printed and lent to itself. So does that even count? That leaves only 25%, around $9 trillion, as foreign debt. That's what the U.S. actually owes the world. Can they repay that? Theoretically, yes. Just print more dollars. But won't that devalue the dollar? Normally, yes. But again, if the world still needs dollars to buy Bitcoin, then even if the U.S. prints money to repay you, you'll still accept it. And remember, America doesn't need to repay all $9 trillion at once. They only need to cover the interest every year. So why do countries still buy U.S. treasuries? Because they need dollar reserves. And holding dollars without earning interest is pointless. You can't use them to buy houses or cars like regular people, so they buy treasuries to earn interest. Bottom line, holding U.S. bonds equals holding dollars. As long as the U.S. can keep paying interest, most countries will keep buying treasuries. Also, Trump once said that in the future, America might repay bonds in Bitcoin. Could that happen? Back when Bitcoin broke past $72,000, I started accumulating, little by little. Not just Bitcoin. It could be stocks, gold, or other assets. Currently, I hold a Bitcoin position at an average price around $99,000. A key psychological level. If Bitcoin crosses $100,000 and shows strong buy signals, I may cautiously increase my position. But here's the thing. If I keep buying, I'll also raise my take-profit level. If the price rises above $100,000 then drops back, we might exit at break-even, selling at $100,000. Maybe I'll offload half of my Bitcoin holdings or Bitcoin ETFs. You might ask, why would you still buy at such high prices? Why set your stop loss and take profit in advance? Because if I buy at $100 and it goes up to $105, I'll move my stop loss from $95 to $100, the entry point. So, if the price drops again, I don't lose anything. I just break even. That way, I can ride the wave upward while staying protected. How much I earn depends on how far it rises. This is risk control, one of the most important things in trading. That's why we always plan our exit before we enter a trade. If you have an exit strategy, you don't need to fear entering at a high price. Back when Bitcoin hit $10,000, maybe you thought it was too expensive. Then, it surged to $100,000 and dropped to $76,000 a few days ago. If you thought $76K was too expensive, then it's now pushing back toward $90,000. If you keep telling yourself Bitcoin is overpriced, you'll always be on the sidelines and eventually convince yourself that Bitcoin is a scam, just because you never made money from it. Now, Trump is officially back in the White House. He doesn't yet have full power, but that doesn't mean he can't make moves. If you used to believe Bitcoin was worthless or that everything I just said is pure speculation, look closely at what Trump, Elon Musk, and their teams are doing. You'll notice a pattern. Everyone they've hired lately must be pro-Bitcoin. Take Trump's new financial advisor, for example. He suggested selling off America's gold reserves to buy Bitcoin. Trump himself has publicly said, "Don't sell the Bitcoin you're holding." What are they preparing for? What does this mean? It means the U.S. government may soon endorse Bitcoin, and if that happens, it becomes legitimate to convince people that Bitcoin will rise, and it actually does rise. Just a year and a half ago, Trump called Bitcoin a Ponzi scheme, a digital tulip bubble. Why? Because at its core, it's just a string of code, with no backing, no collateral. Try trading it in China, and no one will take it. It's banned. But what if in the future, Bitcoin is backed by the U.S. dollar? There's a story on Wall Street. A group kept trading the same can of sardines. Each time the buyer paid more than the last. Everyone made money. Then one outsider bought the can and opened it. It was rotten and reeked. He went back to complain, but the seller just smiled and said, "This is Wall Street. Sardines here aren't for eating, they're for trading." Do you get it? So, is Bitcoin useful, edible? Does it have intrinsic value? None of that matters. What matters is how many people believe it has value. Same with the US dollar. It's just paper. Why can one piece of paper buy the world's gold? Because it's backed by the power of the United States. In truth, people don't believe in dollars. They believe in America. Same goes for Bitcoin. If even the US government is buying it with real money, and everyday people like you and me can own the same asset, wouldn't you want to buy it too? Some people might say, "I'm not buying," but whether they buy or not doesn't matter. Their opinion is irrelevant. Because other countries, investment funds, and institutions are buying. These are the sharks. You are a small fish. When the sharks move money into Bitcoin, prices will definitely rise. And when that happens, you'll waver. Because the people around you, other small investors, will start jumping in too. This is just like the stock market. Most stock buyers aren't trying to become actual shareholders of companies. They just want to ride the price up and sell for a profit. Bitcoin is no different. As long as it's obvious that prices will rise, small investors will flood in. That's Trump's first move. Push Bitcoin prices higher. His second move? Control Bitcoin transactions. As mentioned earlier, Bitcoin is decentralized, but Bitcoin derivatives, like ETFs, are not. If most people buy Bitcoin products instead of actual Bitcoin, then controlling the derivatives equals controlling Bitcoin. Example: many people are buying BlackRock's Bitcoin ETF. Bitcoin isn't regulated by the US government, but BlackRock is. If you want to buy their ETF, you have to go through BlackRock. And BlackRock is a US regulated company. So theoretically, the US government could tell BlackRock to buy or sell massive amounts of Bitcoin, right? And that's just part of the plan. Most people who trade Bitcoin today convert their funds into stablecoins first. Why? Because if Bitcoin suddenly crashes, you need to sell immediately. If you convert directly into US dollars, it takes time. But if you switch to stablecoins, the transaction happens instantly. Once you hold stablecoins, you can choose to re-enter the market or cash out later. For investors without US bank accounts, they can't buy Bitcoin directly with dollars. So they first convert their currency, like VND, yen, etc., into stablecoins. Then use that to buy Bitcoin. Trump's third move? Control stablecoins. Lately, the US government is drafting policies to regulate crypto exchanges and stablecoins. Pay attention to this. For example, USDT. The company behind it claims that each USDT is backed by one real US dollar in reserve. That means one USDT can be converted into $1. It's like issuing a new form of money based on the dollar. Here's the question. If Trump controls stablecoins, doesn't that make him the head of a new Federal Reserve? And finally, the fourth move. Control Bitcoin itself. Right now, everyone knows the US government holds around 200,000 Bitcoin, more than any country in the world. But where did that come from? Confiscation. For example, if someone uses Bitcoin for money laundering, illegal trades, or corruption, the US can seize it. And because America has military bases and legal power in many nations, even if you flee to Brazil or Argentina, if your Bitcoin was used illegally, they can still seize it. The US, the biggest player in the Bitcoin market. They don't just buy Bitcoin with real money. They can also seize others' coins. That makes the US government the largest whale in the market. Once they hold enough Bitcoin, they can manipulate prices at will. Pump or dump, it's up to them. So when they need money, they can just withdraw cash directly from Bitcoin. Think about it. If Bitcoin gets pumped to a high, then suddenly shorted hard and crashes, all the money from people who bought Bitcoin and its derivatives will be instantly transferred to the short sellers. This is a monetary revolution. So far, this entire video has been about Bitcoin. Now think about this. If Trump can support Bitcoin, can't he also do the same for Dogecoin or something else? This is a currency war. In the long run, I believe Bitcoin will continue to rise. I'm willing to break my old mindset and accept that Bitcoin could hit $200,000 or even $1 million under the next wave of U.S. money printing. It's possible. But in the short to mid-term, Bitcoin may become the ATM of those in power. That's why I'll continue to trade Bitcoin using my system. If there's no opportunity in Bitcoin, I'll watch gold and stocks instead. You'll notice, outside of real estate, I rarely hold any asset long-term. Why? Because that's our advantage as small investors. We have the flexibility that big players don't. We can shift quickly, follow trends, and act on signals. Most people buy stocks on gut feeling. No rules, no system. That's like searching for a needle in a haystack among thousands of stocks. You waste time. You often buy weak stocks. You lose right after buying. Even if prices go up, they fall again quickly. That's why stock selection needs rules. A real system. Time is limited, so I'll end here. I share this knowledge for free to help you become wealthy, independent, and truly free. If you don't want to miss the next video, subscribe, turn on notifications, and share this with others. And to everyone who liked this video, I wish you financial freedom soon. Even if just 1 or 2 lines today helped you, that's enough for me.